dog shoving a chew toy into my mic cord. I'll
There you
unplug
go.
my mic. It's like, you gotta go.
I hear you, dude. All right. All right. Hey, folks, thanks
It's a
for
lot
coming
better.
out today for our opening bell OODA looping of our charts. We're going to try and put together a trade plan and for the day and hopefully get some good trades in today. I just do want to remind folks that trading futures contains risk and only risk capital should be used. You can lose all your money trading futures, crypto, or any other financial product. So we do have a disclaimer on the screen. I would recommend maybe taking a screenshot of it. And there you go, Travis. Thanks, buddy. And then take a screenshot of that. So Travis, let's get going here, buddy. Let's start OODA looping our charts, and we can start with our daily and just kind of work down through it.
Sure. Hey, Rob, how you doing this morning?
I'm doing good. Doing good.
Awesome. So that is our disclaimer. We don't trade for anyone. We try and help and share knowledge that has helped us over time, but we're not trade callers, nor are we going to force you to follow us into trades or anything of the sort. So welcome. So I like sometimes just to glance at the 5-minute, even before I go to the daily, just know what's going on so I have something to base from. 5-minute, we're kind of creeping up this morning in a pretty good looking uptrend. So that's what I see so far. You want to jump to the daily?
Yep, let's go to the daily.
Let's do it. Daily. Interesting. And we talked about the big channel that we've had for a while. So first thing that stands out to me is that channel on its way down that we did break out of. We thought when we broke out of it, we're likely to kind of pause out in this next resistance zone area, which is what we did. But now we have since broken out of that as well. We broke out of the resistance area, hit right off the 100% of the channel. That's kind of ironic to me. It's exactly double the original channel where that dotted line is, rejected off that, and now we've actually opened up higher than everything else. So to me, that looks very, very bullish.
It does.
You could say, I mean, there is that tendency that we've been up all night, so maybe it does want to pull back. But as far as just the chart, the way it sits, we are breaking key levels pretty strongly to the upside. So what do you see, Rob?
It's exactly the same thing. Breaking out of that channel was the number one factor for me to where I should be looking bullish. I should be looking longer before going short. So definitely, I think we're still moving up. There's nothing on this chart that tells me that we should be looking to go short until the price action, tells us to go short. I am seeing one thing on my chart as well as yours. I'm seeing that big gap. Did we have a gap last night? I don't think we did.
Looks like it. I can refresh my charts to double check. We'd have to look between the close. So remember the close is technically 1600 sometimes.
Yeah.
Even though it runs to 17.
It depends upon what it considers a close, because I saw the reopen and it was pretty precise.
Yeah, it was pretty precise. So I think the charts are just basically doing the difference between 1600 and 1700 for some reason.
But if we wanted to be technical, we could spend a minute or two talking about gap theory. Gap theory kind of implying that gaps want to be filled over time. And you can see how, again, between the close of yesterday and the open of today, we have this gap of roughly, how much is that? 56 up to
20 points, probably
60,
14 points.
Yeah, we'll call it roughly 15 or so, however many it is. But it creates an area that the temptation is that, again, the gap wants to be filled. So a lot of times I kind of think of it like a lazy river type situation. If the market crosses into that gap from the top side, the implication is that it will be pulled and fill the gap. Sometimes it returns where it came from. Other times it may continue. But the gap theory implies that this gap wants to be filled between where yesterday's close and today's open were. Do you want to add to that at all, Rob?
No, that's very well said. The gap will get filled at some point. We just don't know when. And we don't necessarily trade to fill a gap, but we just kind of, are cognizant of it. That's really about all it is for me. So I don't build a trading strategy around filling a gap that happened. I just keep an eye on it. I mean, I've seen gaps that take a month to get filled. So you just never know. But if you see the price moving towards the gap, there's a good chance it may continue towards it. So.
Awesome. So we can't say we expect a downtrend because there's a gap down there.
Correct.
But again, knowing that it is there. So if we cross into that area, my confidence in that downtrend will be pretty high until we get back to not only the end of the gap, but also the top of this old support level. I might even cut that gap a little bit short, just knowing how heavy that level was for so long. That might actually explain some of our gap here, Rob, when you think
Mhm.
about it. Strong, strong support level, right?
Yep.
Well, where did we close? We rejected off of it once, came back, closed inside of it. Yesterday, rejected off the same level and closed right inside of it.
That's crazy.
So a lot of long orders could have taken it, if you're going long, right off the top of that support level into where we opened at overnight. So it makes sense that the market pushed up, thinking that what was support before also acted as resistance a couple times, strong support again as we went through. You could see very, very common level that will be strong support again, very, very likely to. So I think that partially explains this gap. If you're willing to draw this level on your own charts, please do. Early February, we talked about it. We should go look at yesterday's price action. It'll look pretty cool because we talked about this level a few days ago and how key it was. But again, from the bottom of the body, roughly 44.59 down to the bottom of the wick at 44.28, 25, maybe somewhere in that area.
Mhm.
But bodies to wicks of that early February area was incredibly relevant. And if we have time before OB or shortly after, remind me. I want to show how relevant yesterday was off of this level. Again, using it as support from the top side. So
Excellent.
very, very strong key level.
The other thing we should probably do is start drawing an up channel now.
Sure.
So maybe spread your chart out a little bit and let's start drawing an up channel, because if we see a move up, and remember, we did this too on the down channel after about 3 days of us starting to move down and make some lower lows. And you can see how that down channel was really respected that whole time. So having a channel now going up, we can start seeing if that channel is going to be respected moving back up.
I want to do it from the 4 hours so I can be a little more accurate. Same way we did the down channel. It was easier to be a little more accurate from the 4 hour to see a little closer how those candles acted on both sides. So I do see the temptation. I agree 100%. I do want to put a channel on this, see if we can find it. Not I want to put one, because I want to put one sounds like I'm going to put lines and expect the market to follow. My goal is to find what the market's doing, not to control the market. So
there you go. I love it.
Anything else from the daily that we want to mention? We have, again, turned around on a good move up. Plenty of headroom if you're looking to the last higher high. You could point out a few key levels. If we shrink the charts a little bit to look left and see kind of, are there any clear targets in front of us? You might say that the top where this double tap was is a pretty key area that you might mark into the future if we get up there.
That there would be another one.
Agreed. So you can mark.
Yep.
I was going to say mark a couple levels to pay attention to what happens when we get there. We're actually at that first one if you mark bodies to wicks on that area. So pretty cool to see. But again, the bigger levels, the ones that stand out to the most to me, are those two double tops, the one up top, and then also the support level we're looking at where you had 4 candles and then the retest is resistance, support. You can see how it danced around it a little bit. But to me, that box is a huge, I'm going to watch it zone. The strong temptation being if we come back to it, retesting it to push forward. Or if we push through, what you might see, another common tendency, push through the box, continue the downtrend, retest, and then push down. So that's why we say retest. We look for confirmation of the turnaround the way we want it. A couple different ways you might use it. Let's get to the 4 hours so we can get on through. Anything else you want to point out?
Nope. Looks good to me.
4 hour charts.
There it is.
So now I am going to look for a channel on this move, similar to how, let's point out how we did the pink one, so it'll make sense how we do this one. Well, the first one, we used the top of the move to the best of my ability, and I found that the down angle between those two and the two down there were absolutely perfect. And when you cut those off, you realized it was strong support. Before that time, you might not have seen it. After this point in time, that channel really showed me where it wanted to be. The bottom angle I dropped where these two lined up really well. I like to see long wicks that push out sometimes tell me where the channel should be. It's kind of something I've picked up over time. I like to see that at times. It almost is like orders build up on the channel, and the further the market stretches to get there, the less orders will get in the way. I don't know. I don't have a complete explanation, but that's where I use the bottom line of the channel, and I like how it's been holding. So I try and match up the same angle on both sides of the market, be as accurate as I can be drawing that channel, understanding that the market's going to bend around it. It's really quick. From the bottom of the move, tough to see. We might have to cut off some of those, but is there something to be had here? Maybe, maybe not. I might leave something like that for a minute and see if I like it in a little bit. So let's zoom back in. It's tough to say. It looks like we didn't want to be out of that channel. Finally, we got back up in. It's common to see it come back and retest. This is a channel I'm going to leave as predictive for a minute and see kind of if I like it into the future. I don't love this area. It's kind of hard to find a clear channel at this point because it didn't make a really clean start. Some moves show you exactly what they want to look like within the first few candles. Actually, the last one was a pretty good example. You see how the angle of the channel on the top side of the pink one pretty much held the whole way, and that angle was made in the first few candles. So that was one that it was pretty clear where the resistance was going to be from the top side early on in that channel. But the one we have right now is not as clear. If you wanted to use the very bottoms, you would have something going out this way and then have to wonder where to put the top of the channel, and that's maybe something like that.
The bottom went sideways first for a bit.
Right. So that's a tougher one that a lot of people aren't going to have the same exact channel there. Either one could be correct. I'll leave both of these and see what I like into the future, but I like the red one more, or the top one. I'm going to change this one to white to mark it a little better. Apply. Boom. So two different options you could kind of look at as a temptation of the channel. We'll see what happens.
This too is one of the beauties of NinjaTrader, is that you can really customize your channels. Put your channels on all different charts. Folks don't have NinjaTrader, we would highly recommend that you take a look at them. You can get a demo, and we can put a link in later for NinjaTrader. And they're a partner of FNL, a vendor. We're a certified vendor of NinjaTrader. So great software to help you with your trading. So.
Agreed. It's funny how you say that. It's like software helps me with trading. I thought that's what I use for trading, but it really can help you by how quick and intuitive is the word a lot of times that I use, but a lot of things are just really quick. It can become an extension of your mind, where I know I said this last time I was on, but you want a channel, you want a box, you want a key level, and you've got it all drawn in 30 seconds. You don't have to spend a lot of time. It's just on your chart. So it makes a really fluid learning process at times when you can cleanly draw what you want to have on your charts. And it sounds simple, but I've been through a charting service that was not as easy to draw on, and I would get frustrated when I couldn't get things the way I wanted. Deleted charts, I would get scared that I lose everything. Ninja has a really cool recover function where you can recover your charts, so no matter how much you mess them up, you can always get them back.
And you will mess them up. It's okay. It's no big deal if you mess them up. We all do it. So far, Travis, what I've seen between the daily and now is really nothing is telling me that I should be looking. If I'm looking to trade one direction, and I do like to just look for one direction to trade, it's a little easier for me to trade in one direction with a trend than trying to find spots in two different directions. So far, everything is telling me up. And my primary goal is, when I'm going through OODA looping my charts, is to find what direction should I be trading and where could I possibly be looking for the price to go to if it continues in that direction. And that would be levels, and that would be trading level to level. So right now, after seeing our first two charts, my bias is going to be up. And I know that's, oh yeah, duh, Rob, the price is going up. But you'd be surprised at how sometimes the price is going up on your one charts, and then the price is going down on your smaller execution charts. So we're trying to get confluence between all our charts so they all make sense to us.
That's something that's really helped me over time, is not only grasping the understanding that a trend is relative. Like you're saying, you can be in an uptrend on the 4-hour and a downtrend on the 5-minute. So there's no what is the trend overall, because you probably could make a case for both given different parts of the market, depending on what chart you're on. So to me, it's been really an eye-opening situation to learn how to match in the different trends with each other. And when they tell me the same picture, that's what I want to see. When the 240 tells me we're going up, but we've had a good retracement, we want to go up, and the 5 minutes in an uptrend, that's what I want to see. I want to see like these bigger charts with an uptrend and a big pullback, just like we would look for on the 5 minute. And then I want to see the 5 minute and a really good little uptrend over here with enough headroom to go to the stars at times. And that gives me a lot of confidence. It's not that I have to trade to the moon, but it tells me that this uptrend should be happening. And it gives me a level of comfort with what I'm seeing on the market, because it's almost like the market shows me what it should be doing and it is doing it. So I agree right now, longer term temptation is an upward movement. We're pushing back up after this long retracement that we've had since March, really, since late March.
Yeah,
We've done
and
nothing but pull back.
a couple areas too that this would make a lot of sense. If you remember last week, we talked about, wow, the price really, even though we were looking at a downtrend, we said, wow, look at what the price wants to do. Remember right there, we said, hey, there's a good chance the price is going to want to push up off this channel. We've been in a big down move. We look for price to return to where it's come from. So we were looking at possibly the price moving back when we're at the top of the channel in a downtrend. That was an obvious spot to where the price could want to move back down after it had retraced for 3 days in this down move. Same thing up here, same thing down here. So you're looking at spots in your channel. So right now we're kind of right in the middle of everything. I'm not really sure. I mean, it looks to me like the price wants to continue to move up before it retraces. Now, does that mean it's going to do that? No, I don't know. I don't know exactly. But it looks like it wants to continue to move up after it's had a little pause, and we could see it possibly move up to the next level, which I would say would be somewhere in here.
I agree. It looks like we've built a new floor kind of on our way out here, and you don't know whether it's going to retrace or keep going, but we're definitely on the way up. So it's a place that maybe my stop isn't super safe from a 240 standpoint, if you will, is one way of thinking about it. But just thinking that we're in a good move pushing up, and it could keep going, it could pull back, but it doesn't necessarily scream that it has to pull back right now. I agree with you, Rob. The one point I wanted to make early on, charts will act very similarly even from different time frames. I know a lot of traders, even in this room, me included, that if this were a 5 minute chart and I see a good turnaround like this at the top of my channel, I'm looking to get in on this next candle off the top of my channel to go short. And that's a 4 hour chart. That's not a 5 minute chart. So a trade that, if this were a 5 minute, fits my rules perfectly, did exactly what it should do on the 4 hour. And I encourage people, look at the daily and the larger charts similarly to how you would a 5 minute execution chart. Not that you're going to trade it, but the temptations are very similarly, and the trends, the pullbacks, the 618 pullback, the fib levels are very relevant at times, the 50%, the 618s. So
keep in mind, folks, too, about the 15-minute chart. We talked about this a little bit last night in session. When I can clear my stop on my 5 and my stop is cleared on my 15, that's probably the best trade I'm ever going to find. Because when I can clear it on the 15-minute chart, which is 3 5-minute candles, man, am I in a good spot. So, getting that situational awareness, and Trader Creator, FNL, what we try and educate folks on is PSR, position, situational awareness, and risk management. And part of situational awareness is looking at all these different time frames and then being able to transfer that same methodology, that same finding PSR on each chart. So when you can do it on your bigger time frames, all of a sudden you look at your 5-minute chart and say, wow, what a great spot to get in a trade. And there's no hesitation. Trading's all about confidence. When you have that confidence to get in the trade, I don't want to say it becomes easy, because trading's never easy, but boy, you sure have a lot more confidence. So let's go to our 60.
It puts you in that position where instead of looking for a trade, you're being forced to trade.
You're being forced to trade. Yep. Our good friend Anthony Crudelli talks about that. Yeah. Being forced to trade because you have such a good spot. You see, like, wow, if this isn't what I was looking for and I'm not taking this trade, why am I trading? Why am I even here? And those are the situations that you really want to find. And sometimes as traders, we try and force those situations. I know I do. And that's typically where I don't do my best, because I want the price to do something instead of being forced to trade because you see what you're looking for. And if you don't know what you're looking for, that's fine, folks. That's why we have a program called Trader Creator to help you find that foundational trade, Trade with the trend, look for the discount, clear your stop, room for profit. You know, it's a pretty basic ABC 1, 2, 3 turnaround, but Trader Creator at FNL Futures Networks Live goes through that, and that gives you a real good foundation. So, all right, 60-minute chart. You there, Travis?
I'm here. You sounded confident. You were rolling in. I didn't know if there was a following statement there.
No.
So
Ready for the 60-minute chart.
Can I, hey Rob, can I say something?
Yeah, you bet. Hey, Bryson.
You talk about that gap on the MES.
Yeah.
And there's no, so to me, make a difference too. Talking about that gap theory, you know, it might not, since on the ES there's no gap.
Interesting. ES, there's no gap.
When you haven't seen a gap on my charts, and then I looked at your MES, there was a gap, but nothing on any other charts.
Well,
so I don't know if it. Go ahead.
Yeah, no, I do. I actually have the ES up, and I see a gap on the ES too.
Maybe you need to do a historical refresh, because I don't
Yeah.
have one either. I'm looking, you know. Anyway.
Okay.
Okay.
Cool. Well, yeah, we'll look a little further into that, because I'm looking on the ES right now on my daily, and I am actually seeing a gap from 58 to 68, almost a 10-point gap, and I just did a historical refresh.
Even if you look on your, even if you go to your 5-minute, does it?
No, 5-minute doesn't.
That's what I mean.
I'd have to scroll back a ways to find it on the 5-minute. So, but we'll look a little further into it, and that's a beautiful thing about being at FNL, is that we can all collaborate, and when something doesn't look right, we can all kind of put our heads together, you know, and decide, you know, hey, look, this is why this is happening, and really come to a conclusion, because FNL really is all about sharing and collaborating. So I appreciate that, Bri.
All right. All right. Thanks.
You got it, buddy. Okay. 60-minute chart, Travis.
they take the close of the daily candle at either 1600 or 1615. So even though the price action keeps going, it can go smoothly, but if it's going directionally, it'll create a gap that doesn't show on the 5-minute but does show on the daily, because again, anything between 1615 and 1700 that is normal price action a lot of the times does not reflect on the daily candle. So if you match up the close of the daily with the end of the day, I don't remember if they cut it at 1600 or 1615, but it's one or the other. Mm-hmm. And then all of that little price action between 1615 and 1700 doesn't count towards a daily candle for one reason or another.
Okay.
So 60-minute, very, very similar. Mm-hmm. I'll look back into that too. We can go back over it and double check that, but perfect. Glad to. So 60-minute, very similar to the 4-hour. We can see that if we scrunch it a little bit, we were going down, hit some strong levels of support on the bottom side, had a triple tap over here, and then an area we didn't want to go under where we hit the bottom of that channel before taking up and going out of it. So pretty strong looks of support before crawling out of that key level. Never came back to retest the channel. So if we do get a really hard down push today, a few different areas I'd look for long, but that's one that over maybe not even today, could be in a few days, I would still trust that channel to see it get hit from the upper side.
Yep. Yeah, no, I agree. My channel, we're actually down. We've been riding the bottom of the channel in mine. It's very similar to yours. I just have mine a little bit different, but for the most part, yeah. I mean, the kind of the thing that worries me on your chart a little bit is that we're right in the middle of your channel.
Agreed.
And I think we talked about that too on the 240, that we're kind of right in the middle here. So a retracement right now would not shock me whatsoever. To come back down maybe even halfway between the bottom of your channel and where we're at right now. So if it came down halfway, we'd be looking at around what, 44.85, somewhere in there. Yeah, somewhere right around there. That would not shock me at all if it did that, because we do have a big move on that big green candle. And if it wanted to come down to that level, it would not shock me at all. So again, I'm not trying to predict what the price is going to do. All I'm trying to do is, if something does happen, like I'm expecting the price to go up, okay, just based on what the trend is. But if it does decide to retrace, then okay, I get it. Well, I'm not going to be like, what's the price doing now? We need to have a plan for if the price goes up, goes down, or goes sideways. All right, we got 5 minutes.
Yeah. So 15-minute chart, just real quick. We're looking at same tendencies, but a good looking uptrend this morning. I'm going to try and jump kind of quickly from this one to the 5, but is there anything you want to add on the 15 real quick while we're looking at it? Seems like we hit a top, if anything, kind of turning back for a retracement, maybe, possibly. We'll see.
Yeah, no, you know, again, this is a good chart to look at to say, hey, what stop would I like to clear? If I'm going to go short, what stop would I like to clear if I'm going to go long, and see if that matches up with your 5-minute chart. And that's what I meant earlier about if you can clear your stop on your 15 and then you go to your 5 and it's like, wow, this is a great spot. You'll see that those two will work together a lot of times, the 15 and the 5. In fact, when I'm trading at my best, I'm probably trading on my 15 more than I am my 5.
Fair enough. So 5-minute chart.
Okay.
Let's see what else we got going on here. We have this close-up move. You'll see I drew a red channel this morning, kind of off the price action on its way up, using the bottom of the move. The next two bottoms fit really well, and then the tops are very close to on that angle. So I liked how that channel held. I like that we have hit the blow-off zone. That sounds crazy the first time you hear about it, but 0 to 100 being my full channel, this is exactly double my channel to the other side. So technically would be my negative 100% line. And then on top is the 200. It's a very faint dotted line right there, but exactly double the original channel very often gets hit. I'm not very good at tracing. There we go. But you'll see that line.
Isn't that amazing?
Right off of it.
Isn't that amazing how that blow off channel gets hit and then just comes right back off it?
It's one of those.
It happens so often.
Yeah. Yeah, it's crazy.
It's one of those things that I know people have to prove to themselves, because I know how I kind of felt about it the first time I heard. It's like, you mean exactly double this is going to get hit out there just because, and it does. The stronger that original channel looks to me, the more likely that 100% zone gets hit pretty strong. You'll see we're testing it again right now coming up on OB, so I do want to hurry. Nothing holds forever. OB is likely to blow through key levels, but breaking under that could be a good sign that we want to go down, and closing back above, just the opposite. Closing back above this level could be a good sign that we want to turn back around. But we have 1 minute left, so let's.
If I'm going to take a trade here, going long, what stop do I want to clear? Well, I want to clear around 44.90, 44.89. Okay, so if I'm going to go long, so we're talking about position. So I'm going to want to clear my stop going long down here. So let's count up 5 points. Let's use a 5-point stop. 1, 2, 3, 4, 5. I can get in anywhere around here. Going short, if I would say, hey, I'm going to go short, I want to clear this stop up here. Again, I'm going to use a 5-point stop. 1, 2, 3, 4, 5, right where we're at. So honestly, folks, if you want to go short, go for it. If you want to go long, go for it. I think your position is fine to go either way.
Yeah, we're right in the middle of that last swing.
Yep, we're right in the middle of it. So honestly, over 100 trades, I believe that you're going to be profitable if you use good risk management going in either direction. I am going to trade with the trend. I am going to look for a long entry, probably right around where we're at right now. So we got 40 seconds left.
So
I'm going to look to actually get in at 44.93 going long on a limit order.
I like that. So I would want to scale out where these first set of bodies are. It's likely that if we do hold its resistance to push down, we either push down off the channel or this as a key level as resistance where the last high was. So to me, if I'm going short, I want an order up there with my stop above the inside of that channel. I want my stop to be comfortably above this line if possible if I'm going short, because that's something that into the future used to be support is likely to be resistance. If it does wick up that way, it's likely to turn around anywhere between the two. Here we are, we're at OB. Where we're at sits on the channel. I like long better than short. I didn't jump in, but we're right on the support line. See how I talked about closing inside would be a place to push up from? We pushed up. Where would I want to trade that to? Well, we're at the next key level now, and that's where we're going to test. So we'll see if we can break through it. Or if we pull back from that area. If I was going short, I would have jumped in right this, but I don't love this area for either direction. We're in an uptrend, and I would have rather gone long at OB. That's one I probably should have jumped in. We were right off my support line that I talked about. If it closes above, I want to go long, and it is what it is.
Yep.
But I was trying to line it up, go along there, fill if I can in this area, or before it, and that's exactly what OB did. So we talked about why the two ranges were there, why you would have gone long off of it. If you were listening to me, you could have made that decision. I had kind of walked myself through the clock instead of taking the trade at the zero.
Yep.
But again, talked about if this red candle closes above the support line, it's likely to push up from the area that has already shown that it wants to be support the last time we were there. Where should it go to? Well, it's likely to retest the resistance, but there's no telling because we're in an uptrend. A good uptrend will break key levels in the direction of the trend. You can see we've retested the level. Now we're hitting the channel to the quarter tick. A good sign that channel is a very strong level. Both levels you would have wanted to clear if you go short, but again, we're in an uptrend, so it's kind of scary.
Yeah.
It's
So
awesome.
I have my limit order at 93. It did not get me in. And typically what I will look for is a wick to come down, right? Come down, get me in at 93 and then go back up. So I was looking for really good position. Today, the price did not drop down at all. It dropped down a quarter point. That's all. Typically at opening bell, you're going to see it drop down just a little bit. And I kind of looked to my left, saw that wick there and said, hey, you know what? If I can get in where that wick is, man, do I have good position for a trade to go long. That's one of the things I look for in my opening bell trades is to get really good position. So then, because we don't know that the price is just going to zoom up. You never know at opening bell. It could do either thing. So what I wanted to do is be sure my stop was below here, below 90, below 89, and be able to get good position to go long. So it's zooming up now. So do we have an opening range, Randy?
He's got it in chat. Madeline, awesome. Congrats on your
I
trade.
just typed it in while you were talking. I didn't want to interrupt you.
Perfect.
94.25 to 98.50.
Great job, Madeline. Thank you, Randy.
We've already hit the first pay line.
Yep. All right. So I know a lot of us right now are putting that opening range on our chart. So if you don't hear a lot of talking right now, it's because folks are actually putting the opening range, the 30-second opening range. And that's where the sentiment has been for the first 30 seconds of the market. And obviously it's up.
Yeah, this is a trade that I was talking about why I would have been in where I was. I wish I was watching the clock. I know there's always that Hopi, and I should have been in it. Everybody feels like they should have been in before a green move, but we were literally talking about, hey, this is our support line. If we close above it and use that line as support, which is exactly what this candle did. So as much as it's abnormal for OB not to pull back, I agree with that. But to see an OB that closes right up against a support level that then pushed off does not make it a abnormal OB to me. It's like, well, it did exactly what it was supposed to do. I was talked about if we closed above it, I should have been in. And that's one that at the rollover, I either committed to that trade or didn't. And you either saw the same channel, saw the same similar tendency, or probably didn't have a chance to get back into this trade.
Yep. Dan, it took off without us. Great job, Terry. Terry just filled. Nice job.
Awesome.
Yeah. Way to go, dude. For me, I have to trade the way I trade, not the way anybody else trades. And for me, a 5-point stop getting in at market, I was clipping the bottom of the red candle there. So I have to do what I do well. And what I do well is get good position and clear my stops. If I took a 5-point stop at market, I would have clipped this area right there that I circled. So I put it in at 93, hoping it would come down, just barely wick down, get me in, and then take off. Unfortunately, it didn't do that. So I can't get FOMO and jump on the trade now. Again, we talked about this in other sessions, that the number one killer of traders is FOMO, fear of missing out. You may think that jumping on trades is going to be your is how you trade. You like, the price is moving up, here we go. Well, this is opening bell, and it works until it doesn't. And when it doesn't work, it hurts pretty bad. So develop a strategy that you do well and stick with that strategy.
Yeah, if we break through this next key level, I think it's not going to stop for a while.
if I was aggressive, I'd look for an entry point off of the bottom of this channel, but waiting, confirming a turnaround is the safer play. Waiting for that turnaround is one that I may not be able to get into if I'm trading for contracts. So I might be a little loose this morning and give an example of scale in one and then the rest of them at the OB range, because I already know I'm going to use that range if it comes down there. So if this market pulls to my channel, I'll separate that trade. Instead of having all four at the OB range, I'll have one of them off the channel and the other three at the OB range, knowing that, again, I would be in this trade either way at this range. So it's one that it's either going to pick up my order and run with a quarter of my entire trade. I'll actually start to set that up. So keep it somewhat simple here. I can just build them one by one. Strategy. So I'm going to have one of my orders off the channel and the other three at the OB range. And I'll have to readjust the order. If I get picked up on the first one, I'm going to have to move the stop rather quickly.
Yeah, that's one thing you do really have to watch too when you scale in like this or you DCA in like this, is watch where your stops are, because they can be in jeopardy of getting hit if you don't know them.
So I know that when I enter this first one, it's going to be with a 3-point stop. I'm going to have to quickly grab that and move it under this box right here. And then when I get picked up on my average trade, it'll be roughly 4,500. And then with a 4-point stop, I'm at 96. So I'm plenty clear.
Correct.
So I know that with my DCA, I'll be in a good position if it picks me up to have my stop in the right place. But I also know that it's so likely to turn off this channel that has been heavily respected this morning. Not only the channel, but the 100% blow off, the retest. It's just huge to me this morning. So I know that there's a strong potential that we might not even make it back to the range. I have an advantage in this trade if we get to the channel to move forward, as long as my stop can stay below this area. One thing is I'm not putting my entire trade on up top, because then my stop would have to risk too much to get back under. So I'm willing to only fill for a portion of my trade. There we are, there in one. And it looks like we want to jump to the OB range. Will we do it? Or are we going to miss me by a half point? We'll see. We're going to get kissed. We're in. Okay, so we're in a full trade. If it goes down and stops us out at this point, it stops us out. But on the top side, we want to have this one a little higher at the top of the channel. This one becomes my runner. We'll move it out of the way. So my first fill will be roughly 4 points from 99. My stop will be roughly 4 points down.
Yeah, and I've got a opening range trade that it kissed. They're at 90.5. Did not get me in, so we're going to try it again here. There we go. Now we're in our trade as well.
That's tough.
And, yeah. And we're going to see if this continues to move up. If this blows through the opening range, then I'll go ahead and take my stop out, and I'll look to get in another trade going short at the opening range, going below it, which it may do here. Now, I do want to talk about what the market's been doing lately, and seeing some red flags in the market. What you're looking at on Travis's screen right now is what we look for. We look for that nice uptrend. What we've been seeing, though, recently for the last, couple of weeks, is we've been seeing big movements. We've been seeing consolidation followed by fast moves, big moves. If you scroll back, you don't have to do this, Travis, but folks, scroll back in your charts a little bit and just look at the moves that we've had. They've been followed, or they've been, we've had consolidation where it's just chopping sideways and then boom, a move. And those moves are sometimes hard to grab. So for me personally, what's been happening to me is so my philosophy is small win. Okay, I'm not going to use the word win and loss. Okay, I'm going to use expense for loss and profit for my wins. Okay, so my philosophy is small profit, small expense, small profit, small expense, big profit, small expense. So I'm keeping out my big expenses or big losses, right? The problem is for me personally right now is I'm not getting a lot of those small wins. So that's something I'm working on. So right now I'm getting my big wins, my big profits, because I'm able to get some of those bigger wins, but I'm not getting the So right now, over the last couple of weeks, it's been more of a break even for me. And that's okay. You know, that's okay. Recognizing what kind of market we're in is really key. And I've talked with a few other traders too who've said this exact same thing, that since they've been trading level to level, they're able to get these larger gains, but the smaller ones they keep getting chipped away at. So your goal in trading, in my opinion, is to have your small win, small loss, small win, small loss, big win. Keep those big losses out. How do you keep those big losses out, Travis?
Not trying to do too much, not moving your stops, not chasing against a good trend, DCA for forever and add contracts because it has to turn around. Don't try and control the market. I mean, I've got a few things. Yeah, I've got a couple.
Don't move your stops.
Yeah, Terry knows, don't you, Terry?
Oh boy, do I.
Well, here's a good example of FOMO too. Think if you would have said, oh, this is moving up, and you got in at the top of this green candle. You just got wrecked. So if you would have gotten in up here, at the very top and said, oh, this has got to move up. Well, not so much, so that's a good example of FOMO, of saying the price is moving up, not waiting for a pullback like Travis waited for a pullback to give himself a good advantage in the trade. Now, remember, we're not here to win every trade. That would be silly. That's just not going to happen. But you have to give yourself the best advantage possible. And as traders, we're always looking for the discount. We're always looking for the price to come back. Give us a discount. So now we have room for profit. We've got our little money triangle up here, right? We've got our little money triangle that we can make money in. Versus up here, where's our money triangle? There is none because the price hasn't been there. Very key. FOMO is the worst thing possible. So now we wait. I would say if somebody wanted to get in a trade, they're looking for a trade, you're probably going to want to clear this stop down here. So you're either going to look for a bigger retracement, or you want to at least clear this wick. The price may want to come back down here again. The other thing you can do is, if you're not in a trade now already, then you may want to wait for it to make a higher high. So you may want it for it to come up, make a higher high, then pull back and give you an opportunity to get in. Look for indecision, confirmation of indecision at a key level. And right now our key level would be probably, this channel we have built, something along those lines.
Rob, I think you stopped the market from going up. Whatever you just put on the chart literally just like halted that candle.
There was a reopen range right there.
Yeah.
That's the one. If we go up, if we don't break it this time, I would be really, really wary.
Yeah. Yeah, I do have that control over the markets from time to time, but it never seems to be in the direction I want.
Right.
I wonder why. It's always in the wrong direction. We're kidding, of course, folks. We're kidding.
We did kiss my first fill at 4 points, though.
Yep. Yeah, me too. Oh, I actually got into my first 4-point fill. So I filled on my first contract at 4 points. Now I'll look to go for 8 points. Once I make 8 points, I'll move my stop up. And if we get to that point, I'll go ahead and share my charts and we can take a look at it real quick. But yeah, I was hoping we'd get a little more momentum here at opening bell after we had that move up, that pullback, that discount, that retracement, whatever you want to call it. I was hoping we'd get back into some momentum, but it looks like we've kind of
I would have liked to see maybe just one small red and then keep going. Yeah.
I don't even mind the big red, but we really needed some momentum here going up.
Well, not against this candle. It's not so bad, and it it only came about 6. The close was about 618 of that candle.
Correct.
So yeah, that's not terrible, and it gave you a really good spot to get back in at the opening range. So
that's what I did.
Yeah,
that's exactly what Travis and I did. We did not get in on that first opening bell candle, and that's fine. So then our next goal is, okay, then what do we look for to get back in? And we look for a pullback. We look for a discount. And for me, it was the top of the opening range. Travis had a channel that he went off of. So there was a couple of different things you could do to look to get back into a trade to go long here.
But after this, we'll see. We, maybe we'll get into a trend now. That'd be nice. Or I guess continue the trend.
Yeah.
We probably pretty much defined both sides of your channel.
Mhm.
Huh? Do we hit both sides? Almost 100% and then 50% above.
Yeah, he hit the blow off channel just about, came within a point, half a point of the blow off channel. Right now, we're kind of just right in the middle of his main channel. It actually, yeah, hit the top of it, rejected. So we're kind of in a little bit of no man's land right now. We really want to see this get back up in his channel and start moving back up again. And we don't need it to go to the moon on one candle. I'm okay with a grind up. That's okay.
It looks like we're chopping through 45.
So I scaled.
Mhm.
Maybe we just got back to the OB range again. I scaled back in off the same position. So we scaled out at 4, came back down, scaled back in at my original position off the same OB range. And then if it goes back up again, we'll take advantage of the same range back to 4, knowing that I'll trust this level until it breaks is the plan in this trade. It's something I've been practicing and working on more so than just today. It's something I like trading from key levels and using them over and over.
Yep.
In this trade, we had 4 contracts. One of them is
Yeah,
here.
I
The
missed
other
it.
is
I wish
actually
I'd
a
have put
runner.
some more on.
I-
That's the perfect way to add to your position without increasing your risk.
So the rest of my trade is up top. We just kissed the fill again. Twice in a row. There it
There you
goes.
go, boom.
So twice in a row, we took half our fill. So again, started the trade with 4 contracts, had 2 fills at 4 points, 1 more at the top of the channel. A lot of times it's at 10. I moved it down in this case, not to break the double bar. And then my last fill is actually a runner that you don't see on the screen because it's up out of the way, thinking that all of the charts showed us up today. So I fully expect my last stop to get me out of that trade if we continue to the forward direction. What I can do is use this level again if we come back to it now that we're still in the same.
Why don't you show where your final fill is? Show everybody how far up it is.
I went to the daily to move it on this
Okay.
case. I looked and I said a reasonable expectation would be to have the biggest
Yeah.
candle we've ever had in our lives today.
Yeah.
And again, that's not an expectation. I do not
No.
expect to get out of this trade at 46, 15, 25. What I expect is if this market makes it over 10 to 15 points positive, I start to maneuver my stop in a way that I lock in profit as I move forward. And if I see enough resistance at a key level, I'm happy to take it. I risked 4 points on this trade. As long as I get more than 4 points out of any of my fills, I'm doing well, doing very well.
Exactly.
So if I decided after the next 5 or 10 minutes that, okay, I don't like that this market's not going anywhere and take this fill, maybe I take this fill at 4 points or 5 points, I like that just as much. Because again, I risked 4 points on the trade. The way this trade is set up, I need to average more than 5 points out of my gain over time from a 4 point. So it's actually 3.5, and I shrunk it for that reason because I know my first fills are at 4. But I need to average over 3.5 points from my gain over time to know that I hit the right side of risk management. Meaning if I averaged all 4 of my, well, in this case, we have more gains because we scaled back in. But if I average my gain and targets together from what I risked, I need to get more than this 3.5 points on 4 contracts, which in this case, 3.5 on 4 contracts is 14. So 3.5 times 4 is 14, right? Anybody else want to do math? Okay, so in
Not
this
me.
case, we scaled out twice at 4 with 2 contracts. So that would be 8 and 8 would be 16. So we've already made back our entire risk in this trade in a manner that even if we stopped out break even, I would be positive, but I don't plan on it. Hopefully this will
keep moving.
mosey on forward,
Yep.
right? Sometimes what I'll do, one strategy, knowing that my safest stop is the full risk, sometimes I'll move my other stop and just kind of move it
manage
up
your
to
risk
the
a little
last
bit.
key level and say,
Yeah.
yeah, if it comes back through my entry, I'll lose 1.5 points, but by that point, I don't trust the trade as much. Now that we're back up in this area, 99, 5 points would be 7 points is 05. Got it, 6. Sorry. We'll take 6. I like 6. We're back at the bodies. We're near the top of the channel. Again, anything over 4, I'm glad to be flexible.
Let me, why don't you put your charts down for a second? Let me show mine.
Sure.
So I can show what I'm doing here too.
And I do have a trailing stop on my last one. I'm going to move it positive. Go ahead.
So we just hit 8 again.
Yep.
This is
So-
the area we got to clear.
Yep. So I just, so now I'm in my second contract or I just filled on 2 contracts. So now I am sitting on my trade at plus, my first contract I got out +4, my second contract +8. So
Awesome.
now, yeah, beautiful, huh? And that was all based off of this pullback here, getting me in at the top of the opening range. So now what I'm going to do to manage my risk is I'm going to move both of my stops up, and I'm going to get 1 point. So if this if this decides to drop like a rock, I'm going to take 1 point on 2 contracts. So right now I'm +12 in the trade. Worst case scenario, if this drops like a rock, I'll get out at +2 at 2 contracts. I mean, +1 at 2 contracts. That would be a +2. This next contract is a +12. And I'm going to kind of do what Travis just did too here, folks. I'm going to go ahead and move this way up here. So if the price decides it wants to really run up, now I could be in for a runner, and I could have a something that goes for another 20 points. So if this one fills, we're getting close to filling here. This one will be a +12. You can see when this gets to 12, then I'll be at 1 contract. So it'll get me out of a contract. So
Yeah, if you look at your 4-hour chart, look at the big W we're forming, and that makes even more sense when you look at that.
let's take a look here.
And then quickly after that,
Oh,
I do
yeah,
have
there
a
it
trailing stop that I want to talk about that's now picking up. So
Cool.
yeah, 1 minute. Go ahead. You're about to hit.
Here we go, folks. Let's see if we can get a +12 out of this trade. So we're +4, +8. Let me get rid of that one. So this would be considered for me. Well, it's a combination. This trade that I'm in now, it's a combination of an opening range trade, and it's a pullback trade, right? So I use the opening range, a key level, as a spot to get in, to where I was still able. I couldn't clear my stop totally. I would love to give my stop below the opening range, but I gave myself a 4-point stop on this. So it came close to filling, but not quite.
Awesome.
So if you guys want, we'll go back to Travis's charts. If you want to just take a look at, 4510.5, that'll be my +12. So I'll be able to add +12 to that. And then my final will be a runner. And I'll, like Travis does with his trailing stop, he's going to talk about here in a second. I'll move my stop to trail it. And, as it moves up, hopefully we have a nice big run today, and we'll be in the trade the whole time. So I think a lot of us, where we came from, right, we grinded 4 threes, a gain of 4 and a stop loss of 3. So one of my primary goals was to learn how to get in on some of these big moves and not have to look for re-entries every time I made 4 points. And this type of a trade where I'm trading, and this is the beauty of the micro E-minis too, is you can trade multiple contracts, whether you're on your sim or you're live. I do this on my live account too. Typically when I'm sharing my charts, I like to be on my sim. Remember, we're not here to call trades for people. We're here to share and collaborate. We're not trade callers. So, for folks that may be watching on YouTube, if you're looking for trade callers, we're probably not your group. But if you're here, if you want to share and collaborate, and maybe get some ideas of things we're doing and then practice them on your own, or practice them with the group and get confidence in those trades, that's what FNL is all about. So go ahead and you can start sharing, Travis. That's kind of a red flag, Derek, isn't it? All 3 markets are totally different. We haven't really looked at them yet.
Yeah, thanks, Rob.
Yeah,
you guys doing a great job, by the way. Hey,
thanks,
so the MES and the NAS are now kind of paired up, although the NAS is on the bottom of the opening range, whereas the MES is, the S&P is way at the top.
Yeah, M2K is like way below.
Yeah,
now.
the M2K, that's rotation out of
Russell.
that one.
Yeah, everybody's rotating out of the Russell right now.
Yeah. Which one has to catch up with which one?
Yeah, all right.
Yeah, that's the question. But they're not going, what we've been talking about the last few days is they're not going in the same order. So, red flags.
Yep.
One interesting comment while you're transitioning, Rob, I look back at the last week of kind of, and again, I haven't done this long term, but the Bollinger Bands, the 2 Sigma Bollinger Bands, right before opening bell have been between 7 and 12 the last 5 days. And then by 10:30, they're in the 30 to 80 range. So obviously there's this.
You're talking about points, right?
Correct.
Okay,
Points
good,
on
good
on the S&P. Thank you.
Yes.
Points on the S&P. So there's a narrow range going into opening bell of 7 to 12 points.
Mm-hmm.
And then by the time 10:30 hits, the Bollingers have expanded between 35 to 80 points in the last week.
Wow.
So it's just one of those things that what you said earlier about this market going, up and down every which way is proven out in the last week by the Bollinger Band. So
another face of the market, right?
Correct.
Right. Consolidation, boom. And then it just makes its move. And if it's sometimes it can be tough to get in those moves because when they happen fast.
Yep.
A lot of times it's not a slow grind up like we love to see. We love to see that lightning bolt pattern. So that's why sometimes it's better when we see this during the day, sometimes good to go at night, go take a look at night, or do what our wonderful trader and moderator Valerie does, and she'll be pulling up the Russell. So she'll pull up the RTY or the M2K, and she'll trade that. If you guys look at yesterday's price action, all the bottoms were coming up on the Russell, giving her a lot of more opportunities than on the S&P. It was going sideways, big moves going sideways. So that's another thing that folks can look at, is take a look at the Russell and how that sometimes have both of them up, and take a look at, if you're not seeing what you're like on the S&P, then maybe go over to the Russell and see if you have more of what is in your comfort zone, I guess would be the right way to put it.
Yeah. And it's about half the risk. So in terms of dollars, per point. So it's nice. It's the same $5 per point on the micro and 50 on the mini.
Mm-hmm.
And hey, right now we still have increasing bottoms since opening bell. That hasn't been broken yet. So hopefully this stays going
This
north.
is a pretty big move on an announcement day, and
Here, I'm gonna draw on this, and hopefully on Travis's chart, and hopefully I didn't just curse us here with my drawing that no, the market's gonna fall. But you can see what Derek just talked about, how these bottoms, these wicks, are all lined up together. You see that? That's a really good sign that the price still wants to move up. We haven't had any wicks clear the wick, previous to it. So that's a pretty good indication that this price still wants to move up.
Right. On the other side of that spectrum, if you drew your bodies to wicks area on the top side, the first time we've hit so cleanly, the bodies closed at the same area, and then this wick came to the quarter tick of where that bottom side is. So to me, it gives a solid range saying we're pinching.
Consolidation.
And when we break out of either side is the way I'm going to look. Whether we fall out the bottom of this, I thought about using this channel again until I realized how strong that resistance was up top. And it's like now my headroom's getting smaller and smaller. However, if these candles are making really clean highs that still looked really high over there, I would have a lot more confidence that this bottom support line would want to continue, which you didn't see. So what came back, my runner got stopped out, I think 2.5, 3 points positive. Actually, there's my stop out on the last quarter tick of that red candle. It's kind of funny how that happens, but it shot down real quick, took me out. I tried to have my runner or my trailing stop a little under the 10. It was right at it. I did get back in though and took another, was going to be 4. I think I took 3.5 out of it, but got back in off of the retest back down that came back, retested the 10. I knew my stop would be under the area again. So I got taken out of my runner, but took another trade where we filled again for 3.5. So this morning had a solid morning. The stop outs were the first time this red candle came back. We did end up stopping out right on the 21 EMA, right at the bottom, a point from stopping out, but that will happen very often. If you beat yourself up every time you stop out by a point and the market goes your way, you'll have a pretty tough trading journey ahead.
And typically what I tell myself is, you know what, my stop was in a pretty good spot actually, now with that being said, the number one reason for being stopped out of a trade is having your stop too close. In this scenario, that has nothing to do with it. Having your stop too close is when you move your stops up. Let's say you want to, here's a phrase I hear a bunch. Well, I want to lock in 1 point. Oh my goodness. How many folks here have tried to lock in 1 point and after 100 trades, they're actually losing money? Yeah, but I'm winning 80% of the time. How come I'm not making money?
You locked in that point. Good luck with that.
Yeah. Instead of laughing, it turns your break even upside down so quickly that it's tough. I mean,
it's really tough.
when you follow a break even, like let's say I'm only taking a simple, a lot of times we start traders out with a P3 S2, a 4-3, and a 7-5, right? Three kind of basic trades that roughly speaking, their break evens between about 40 and 43%. We could just call it 40% here as a break even, right? So 10% above that puts me covering commissions, comfortably profitable. I could aim at 50% and be a comfortably profitable trader, only filling half the time. Now, if I'm the type of trader that wants to get out early, we'll do this in blue down low. Let's say instead of my 4-3, let's say I want to take 4 threes, but instead I'm locking in 1 point. It'd get even worse on the 7-5 area, but let's say it was a 4-3, but I'm going to lock in 1 point. So a P4 S3, if I'm doing break even, P being your gain, S being your stop, your break even is S over P plus S. Break even is very, very important. Go ahead.
And real quick, when Travis talks about a 4-3, a 3-2, a 7-5, we're talking about points. So I know a lot of people, maybe out there in YouTube land are used to ticks. If you're talking ticks, just multiply this times 4, each of these points. We talk about points because we're not here to grab ticks, quarter points. We're here to grab full points. So when he says a 4-3, he's talking about points.
Right. So that'd be like the 16-12, if you will, if you're talking about quarter ticks.
Correct.
So in this case, a regular 4-3 break even, we'll go kind of quick through the math, but the break even is my stop divided by a combination of the two. So for a 4-3, we'll go back to our pink one, that would be 3 divided by 4 plus 3 is 7, and then you get the 42.8, I want to say it is. We'll just call it roughly 43%. So on a regular 4-3, 43% is my break even target. I like to say roughly 10% above. You could be profitable under that, but my target, if I am perfect trading, I'm 53%. And that doesn't sound like a lot, but over time, if you can have the confidence in your trade zone, that can be plenty. But the point I'm trying to make is you can win just over half your trades and be as comfortably profitable as you need to as a trader. Now let's look at the other side of that spectrum, what we were just talking about. If I get out early, if I start taking 1 point instead of 4, let's look at what the break even there is. Again, S over P plus S, my stop is going to be 3 divided by my gain in this case is 1. So 3 plus 1 gives me 4. Don't need a calculator for that one. That is a 75% break even.
Ooh.
But back up, I don't want to be a break even trader. I need to cover my commissions and be comfortably profitable. So now my target becomes 85%.
Win rate.
And the quicker you realize exactly, my target win rate becomes 85% fills now that I've taken a shorter gain out of my trade. And this is why understanding your break-even formula can be so important. Because as an 85% trader, maybe I'm trading closer to 60% getting out early. I feel like I'm doing better. I feel like, man, I'm killing it today. This is it. This is what's trading's supposed to feel like. You feel like you've made it. And then you go look at your track record and it's like, I thought I did well this week, but I'm negative. And I myself had a journey where I started trying to do too much with scaling out and going for too many points. Kind of like you talked about earlier, Rob, where I would hit my first target and then break even on my second ones or really close to it. And I was turning my risk management upside down to the point that I felt like I was doing good in the trades because I would be positive coming out of that trade. But when I would stop out, my break even from the stop out and positiveness was not working out for me. I'd turned my break even upside down. So even though I felt like I was doing pretty good, I noticed that had I literally just taken my basic trade, either 4-3 or 7-5 or 3-2, depending on my stop, had I just left these trades, I would have had a better week than trying to extend trades, even though I had trades that hit 20 and 30 points to the upside. I realized that going for that all the time was not a consistent way of trading. You can make a good case you just missed a pullback to your OB range again. I was talking through it. I did not take that trade.
I'm going, oh man.
Right exactly where my where I moved my stop up to. Got
a
me
lot
out
of
right there.
confluence there. We
Yep,
had our old
yep.
resistance there, the 30-second range, as well as
Yep.
the 21 EMA. So 3 different reasons that was a good spot to see it hit, which explains it hitting on the quarter tick. I would probably use this channel as a place to scale out if I could, scale out around 3 to 4 points, or either take my fill from a 4-3 right there. Goes back to what we were just talking about. Do I deem this area an area to say, we're really ranging? Where's my paint here? There we are. So I could look at this area and say we're really ranging. I know I don't really want a majority of my fills above this top because we've made a really strong top up there. So it becomes a range of execution to say the market shows me it should go from where we're at, maybe a little bit to the up direction, but maybe not past this top area. So that last trade would be an area that if I could risk 3, maybe I take 4 points to the upside. Hindsight's 20/20, of course. You might still do it, but the range of execution, again, created by a strong level of resistance up top, drawn bodies to wicks that I really am starting to trust those levels. I have trusted those levels. I would like others to try it for yourself. Even if you prove that you don't like it, try drawing bodies to wicks, rectangles to mark support and resistance, especially when you see strong areas. Like in this case, go ahead.
Somebody might also, Travis, they might draw levels and they may not like what you're doing or I'm doing or Randy or Derek or whoever, but they may find something that they like and they bring it to us and say, and it opens our eyes, to like, hey, well, what about this? Because
absolutely.
Yeah. And that's the beauty of FNL is that we all share and collaborate, and there is no one, there is one way to trade. You know what that way is? The way that makes you money. Just like in poker, I'm a poker player and people ask me about, hey, Rob, what's the best way to play poker? Well, the way that makes you money. Well, how do I do that? Well, you try new things. You get outside your comfort zone. You have a foundation, you build a foundation. Then you try things. If what you're doing, folks, right now isn't working, guess what? You've got to try some new things. And that's what FNL is all about. That's what this group is all about. Trying new things, coming to the group and saying, hey, here's what I'm doing. What do you think? Because we're going to learn from it too.
So you said something important. It's like the way that makes you money. And I think bottom line, you're kind of hinting at what we want to do here is create a repeatable trade zone to the point that I trust my zone so much based on a set of criteria. Like in this case, I have a very foundational trade typed out on the screen. And I know without a doubt that if I hit this criteria, that is a 50+% trade based on a track record that I've done hundreds, if not thousands of trades close to this zone, but at least hundreds with this exact setup as far as looking for a trend, for a retracement, and either a diamond or a double bar from a key level. Once you get those 2 patterns, I've defined my entry point to the best of my ability to where I know that that's a repeatable zone. If somebody showed up, as much as I respect everybody's opinion on this planet, probably sometimes more than I should, but it wouldn't matter if they said, well, Travis, I don't know if I really like how you took that last trade. Maybe I didn't like whatever it might be. If I'm following my rules, I'm not going to say I don't care, like I don't respect that person, but that person is not going to prove to me that I don't know how to trade because I've proven to myself that I do. And I think a lot of times traders, they don't have that repeatable pattern. They know they're looking for pullbacks. They know they're looking for trends. But when it really gets down to why do you take that trade and what are your actions while you're taking that trade, it's not a set in stone repeatable pattern. And a lot of times what we see happen to traders is they'll have good days and bad days and not know what they're doing differently. The common sentiment is, well, I was doing the same thing. And it could be a combination of different things. Could be the markets acting differently. Could be the trader, the strategy. Go ahead.
So I think folks should write down, it is going to exactly what Travis is saying. I'm going to type it on your screen, okay? If all of a sudden what you're doing isn't working, again, because remember, there's phases of the market, you have to ask yourself, and I didn't make this up, folks. This came from our good friend, Anthony Credelli. Is it me? Is it the market? Or is it my strategy? I would highly recommend folks write that down, because when all of a sudden, and trust me, all of a sudden things are not going well. And this is what happened for me over the last month, 3 weeks to a month. Not that I'm blowing up an account. It's that I'm not doing as well as I was the previous month and a half, 2 months. So that's when I had to look at, is it me? Well, no, I'm still making good decisions. Is it the market? possibly, or is it my strategy? And what I looked at was, wow, it's the market. I determined over the last few weeks that the market was consolidating and then having these big runs, consolidating, having these big runs. So if all of a sudden you're not doing well and you had been doing well, then ask yourself those three questions. Go back and review your trades. Am I making good decisions? Am I FOMOing? Well, if you are, then it's, if you're FOMOing into stuff because you get a big move up and you jump on it and then it pulls back on you, knocks you out. Well, it's you. It's you. So ask yourself those three questions when you're not doing well.
I agree with that. And the more you can narrow down what your plan is and what your strategy is, the more you can really understand which one of those three caused your errors on the day. If I don't know exactly what my strategy is, I am very, very likely to blame the market. Man, the market sucked today. Oh, it was killer. And it's like somebody else might show up and be like, what was wrong with it? There's always people who like the day and people who don't. And you'll realize that even in the same trade group where a lot of us trade similarly, there will be people who have very good days on the same days that other people get blown up that day.
Yep.
That's why me as a trader, you'll almost never hear me say nobody should be trading this or something like that, because somebody might have a repeatable zone. Somebody out there is making money in a way that they've done before and are comfortable with that price action. I'm comfortable saying this is outside of my trade zone. Sometimes I can even point at why you might take a trade that I won't take, but I like to try and put myself in other people's shoes and say, I could see why you would like this trade because of X, Y, and Z, or so on and so forth. And if that's part of your zone, then so be it. But it just goes right back to having a repeatable zone that you do your thinking before you do your trading.
Yes. Have a plan before you get in the trade. Is that what you mean? Is that the same thing, right?
100,000%. I have a plan. I have a sheet that I've actually been filling out that helps me tremendously. And
that sheet is available. That sheet is available too at FNL in member resources. So it's called Travis's Daily Plan. So
it's just a daily trade sheet. Agreed. It's not much more than what you would have on a track record, except for I'm writing it out with a pen and paper. And something about doing that was almost like writing on a chalkboard on the day that I should discipline myself. Like, it's one thing to mess up a trading day and then walk away. It's another thing when I mess up a trading day and I have to sit there and write it out in pen and say, I got in against the trend without confirmation at this level. It's almost like I'm disciplining myself, and it really helps me to stay consistent. It also helps me to know that I'm following my rules. It helps to keep me from over trading at times. I have something that after 10 trades, it asks you, why should I keep trading? Meaning if you've taken 10 trades on the day, a lot of times that's a good amount. And what happens to me sometimes is I end up spinning out and getting less focused on the good trades. And there are days that I go from 10 trades to 30 trades and don't have any more points than I did at 10 trades. I just kind of spin in circles and stop caring about how good I'm doing. So I really want the days that I continue trading to be because we're in a good trend, still getting retracements, and the market's doing exactly what I want, rather than dug a big hole today, gonna try and get it back in the next hour or something. That's bad.
It's brutal.
So I need to walk away sometimes, and that goes into other rules that I have that kind of keep me disciplined during the day. And that, was there something you wanted to say, Rob? I see you kind of marking levels.
Yeah, I'm just marking for folks. They, if they know, have read our Chop Zone blog. For me personally, I'm not looking to take a trade until we make a higher high. At this point, I feel like we could just be chopping back and forth. This is me personally. Okay. I know that there's other ways we can trade this and off of Bollinger's and getting into a channel and blah, blah, blah. But for me personally, I'm going to stay out until I see the market drop below this area. And if I want to be really safe, I could even say until it drops below this area. This would be the area that I would feel like, man, I could just be chopping back and forth and get chopped up. So I want to make a higher high, have it retest this area. Travis has a beautiful little zone right here, beautiful little level. Have it retest that, look for indecision to go long, or I want to drop through one of these levels, do the same thing, have it retrace, have it get a discount, and have it get indecision, confirmation of indecision at a key level, and then I'll look to go short. But if I'm in this area, for me personally, this is how I trade. I'm not looking to take any trades. So, but folks have to find for themselves what they want to do.
Right. Confirmation of a turnaround at a key level.
Yes.
Yeah. Sometimes indecision.
Yeah, you're right. Confirmation of a turnaround. Correct.
I like to say that sometimes indecision are dojis, but indecision does not necessarily mean turnaround.
Turnaround.
And
You're
a lot
right.
of times people get that confused. Indecision is a question mark, is we're seeing a battleground. We're going to see, can it turn around here or not? So indecision is great to see in the center of a turnaround pattern, but I think often traders conflate the two and think that
I agree.
doji means it's turning around right here. Doji means it's likely to if the next candle turns around right here.
Yeah.
So you still want to have that confirmation of the turnaround. The doji is a great symbol to use. It is great for showing balance points, places the market might come back to. They're almost powerful little guys, but they don't tell me the market has to turn around. You can see that one specifically is just in the middle of a bunch of green candles.
Yep.
And it's very common. So do think about when we're confirming a turnaround, it's very self-explanatory. Like off the bottom of this channel, we had a couple areas that you want to see the market down and then close in the direction of your trade.
And look, you have an FNL diamond there too on both of those.
You do.
Beautiful, huh? And all those actually. Look at all
Awesome
those,
areas
all of
this
them.
morning.
Yeah.
And then the last one we actually stayed out of because this was a report. So
That's a good good thing to bring up right now, folks. If you folks are not looking at Econo Day or some other wherever you want to go, this should be part of your OODA Loop process. And Travis does this every morning in his session. They look at the reports. What reports are coming out? Thursdays typically can be very big report days, and they come out at 8:30 East Coast time. So I know that the folks stayed out of a trade there because of the reports that were coming out. So the red marks are ones that can move the market. And we have Jerome Powell talking.
11.
At
That's
11.
45 minutes.
45 minutes. So, it could be in for some fireworks, folks. If you're in a trade, if you're down in the
Explains
trade,
the market right now, doesn't it?
yeah, it does. It explains kind of why the market's just kind of in a chop zone right now, because we have Powell talking, the Fed chair, Jay Powell, good old Jay Powell, here in 45 minutes. And there's a pretty good chance the market could get a little crazy.
Very good chances, similar to a Fed meeting. Anything about Fed anything, whether it's Jerome Powell or anything that says
FOMC.
Fed chair meeting,
Yep.
FOMC meeting, anything of the sort, oftentimes sends the market into a little bit of a frenzy for reasons. Okay, so let's talk about that. We said this morning we stayed out of a trade because of a report. You'll see the trade I'm specifically talking about. I got to shrink my calendar just a little bit over here. Is this area at 8:30 because we had two reports at 8:30. And a lot of times we can't stay out of the market based on every single little economic indicator, but what I'm looking for is areas where we have multiple red dots on the same time frame. Again, Rob mentioned it, but if you go down to the key, we have red dots, green dots, and then black and nothing. And you'll see red is market moving indicators. Green means it merits extra attention. I had the false impression early on that red meant down and green meant up, and I thought they were telling you which way it should go. In reality, yeah, those are our diamonds, not our economic calendar over here. But red means it is a bigger explosion, if you will, a bigger bomb. But bottom line, if I know that multiple reports are coming out at the same time, I know there's going to be an influx of traders on the market who don't necessarily care what the market's been doing, don't care what the trend is. They're looking at a piece of paper that tells them either market's going to run to the moon, market's going to run to the floor. But as futures traders, we lose a little bit of our advantage on a market knowing that we're relying heavily on technical analysis of what this trend is. So if too many traders are showing up that don't care what the trend is over the last hour or two, don't care where we're at in a retracement, don't care what the market looks like, again, I lose a little bit of my advantage as a technical analysis trader. So if we can identify areas that multiple people are showing up and may not care about the market, oftentimes what you see at a report is the market get really emotional. Sometimes it even wicks both ways as it starts out, kind of clears out a lot of the traders before it chooses a direction.
That whipsaw effect, right?
Right.
Yeah, and you'll see that a lot with the Fed stuff, even more than normal. And it's not unlikely to see 40 and 50 point swings, 20 or 30 points in both directions over just a few minute period. So my strategy for that is if I'm down in a trade, I'm currently currently in a trade and I'm down, well, I assume that risk before I got in the trade. So I just say, whatever, maybe I'll fill on it. If I am up in the trade, I just get out and say, let me take my profit because I don't want to leave this to chance here. But again, if I'm down in the trade, I've assumed the risk. I go ahead and just say, hey, maybe this Fed report will take it positive for me. What I don't recommend doing is FOMOing. If that price is going up and you're thinking, I knew it was going to go up, I would not recommend jumping on it. Maybe try it on your simulator for a while, but be careful doing that too. Back in 2017, I did that and I had a lot of success on my simulator for maybe 2 Fed reports. And so I said, let me do it live. And guess what? I did really well on that first one. That first Fed report, I did really well. And this is on the ES. And then guess what? The next 3 Fed reports, I got absolutely wrecked. I mean, absolutely wrecked. And I lost about 30 to 40% of my account trading those Fed reports on the ES. And after that, from then on, I said, nope, I'm never trading a Fed report again. I'll let other people risk that money, not me. So here we go. We're breaking down.
Pretty strongly.
Yep.
Still not past the 89 and 200, so it just tells me we've been going up for a while. So this is still a kind of, I'm not sold on a downtrend yet. If we get a good turnaround, especially a good turnaround at the 200, you see the more I scrunch these charts, the more it looks like this could just be a retracement that was due, if you will, from that area. Mm-hmm. So if we had a good pullback, maybe even to 30-second box from yesterday, 200, a couple different areas, you could see how relevant that was overnight, showing as resistance a few times. So very likely to see support in that area if we get down there. Could be an area to maybe think about scaling out of a trade if we get a turnaround. So I can't assume it has to stop. But again, we have Mr. Powell coming on by that time. So do we still trade? Tough to say. Could this be a precursor into an emotional day? It absolutely could. So I might not chase that price action for sure. Just going to let it come to me. Anything else you want to add? Anybody else have anything they want to add today? Anything we missed? Anything they want to add about trading? Solid morning though, Rob. Thanks for hanging out. Congrats on our trades. Times. I think all of us were
14 of mine.
Comfortably profitable this morning that we're trading on session. That's pretty cool.
Yeah. So, yeah, folks, if you guys have any questions, and we're going to end the, let's get some questions answered before we end the YouTube stream. Obviously, we're not going anywhere. YouTube Live will be off. The stream will be off, but we'll still be here trading and having a good time. So is there any questions? And if not,
thank you all for coming out too.
Yeah. Thanks for the interaction too.
An FNL group member, maybe you're out there in the YouTube world, we appreciate you as our audience. Our goal is to kind of reach out and spread out and share some of the information that's helped our own traders with some other people, because there's a lot of genuinely kind-hearted people at FNL. We've built truly a trading family. I know people want to say that it's almost like a cliche catchphrase, like, yeah, we built a trading family, but I genuinely believe that many of these members care about me as a person as much as they do 100%. Trading. And it's, I do the same way. I feel like that's an extension of my family at this point in time. So it's really cool. Just thanks, FNL.
You bet. You bet. All right, guys. So YouTube fans, YouTube people, hey, we'll see you guys again tomorrow. Tomorrow is